Hey guys, welcome back to another video by Fully Informed Trade, or Fitrade for short, knowledge for everyone. My name is Alex Cho, and today I'm just going to go ahead and review gold and silver and the gold and silver mining stocks. For starters, the silver spot has been dropping substantially on the Friday session. You do have a bear flag pattern right here, and again, you even have an 8-day consolidation on the 20-day moving average before heading lower. You do have a percent K crossing below the percent D on the slow stochastics, not the fast, the slow. Slow are much more accurate at predicting market movements based on the oscillator slowing pattern and performance. If you see a break below the percent K on the if you see a break below the percent K on the percent D in the silver market, that is very, very, very indicative of future losses in silver. Therefore, I am a very big bear on silver right now, especially since the dollar has been weakening, or not weakening, but the dollar has been strengthening on Euro-US dollar weakness. Again, even if there is somewhat of a bounce in the Euro-US dollar, I'm not too convinced of it. Even if it gaps up a little bit, I'm not too convinced of it. I do anticipate the Euro-US dollar to weaken over a period of time. As for silver, silver has some very interesting factors. Bollinger Band is tightening as we have a bear flag pattern in play. Along with that point, since you have a bear flag pattern in play and a break below the 8-day consolidation pattern, and you have a bearish engulfing pattern and a percent K crossing below the percent D, one could easily assume these are all the indicators you really need to be negative. But then again, let's also consider the fundamental factors. Fundamental factor number one: inflation isn't as big as market participants have anticipated. And why is that? Very simple. Inflation requires banks to lend. You can't get a money multiplier effect without banks to lend. Therefore, inflation is literally not warranted, non-existent almost. And that's kind of what Federal Reserve Ben Bernanke has been kind of pointing out to you guys the whole entire time. It's just that no one was listening. Okay, so without inflation, and food price inflation is kind of different because food has, different factors to consider: weather, climate. It does have an impact on how much you have to spend, but it doesn't really tell you how much money is is being expanded into the monetary system. Currently, our monetary system isn't expanding as fast as people anticipate, and that's pretty much what inflation truly is: how many more dollars are being displaced versus the true nominal value of all assets, and all basically the nominal value of all exchange. So again, that's really hard to determine. One would use the consumer price index. Consumer price index really hasn't gone up as much. If you increase food price, if you include food and crude oil, you could say it's gone up by around 15 to 20% this last couple of years. But even if you say it has, even if you say the economy has inflated by 15 to 20%, does that warrant silver going up 350% or 300%? No, it doesn't, because if the economy inflates by 20% and silver goes up by 300%, there's a 280% spread between inflation and asset value appreciation. Therefore, the reason why inflation doesn't work as a part of the trade is because Federal Reserve is taking away the punch bowl. They're not providing quantitative easing 2 anymore, which was causing fake inflation. And the real inflation isn't going to happen for some time until banks start lending money. Therefore, fake inflation is going away. Then you have China manufacturing dropping. So not only is silver a hedge against inflation, it's also meant to be used as an industrial metal. And if there's demand being dropped for in that aspect, as far as being an industrial class metal, then you have to be bearish on it in that aspect as well. The third factor is the rate hikes, or the margin hikes, caused by the Chicago Mercantile Exchange, and you have to consider the dollar's upward trend. 4 main fundamental factors causing the drop in silver prices. Plus, we have a whole slew of technical factors as well. Therefore, you have to be pretty bearish on silver, and I can't be too bullish on it. Moving on, I want to go ahead and review this gold spot. Gold, I don't really have much of an outlook on it. It's a really hard chart to read for me right now. I wouldn't be a buyer, and I wouldn't really be much of a seller. Just treat gold as a form of savings, and you should be okay for the most part. Gold isn't as volatile as silver. I didn't see gold go up by 400%, so I can't really say gold is in a bubble, at least not yet. Again, gold does appreciate a little faster, 30% more than the rate of inflation, but that's not as bad as silver. Silver is due for a much bigger decline. Gold not as bad, but I could see a pretty decent pullback in the second half of 2011. So if you're trading, um, I wouldn't hold on to silver or gold futures contracts for too long. I wouldn't hold it on for a whole year. Hold on to gold futures for a whole year. I wouldn't be a buyer for that long. So again, I'm not too bullish on gold. I do anticipate there will be better bargain hunting opportunities later on down the road. As for new gold, really strong downwards trend. Ticker symbol is NGD. I wouldn't be a buyer, and once it crosses below the 200-day moving average, I would definitely sell short. Moving on, Freeport-McMoRan, and it is closed below the 200-day moving average. It hasn't been able to break above the 200-day moving average for too long. I can't be too positive on Freeport-McMoRan. I wouldn't be a buyer. I would be a seller. And shorting isn't a bad idea either, considering the market environment we're dealing with. Anyway, I think materials overall is a very, very weak sector to be in. Avoid materials, avoid financials, avoid technology. Those are not the sectors you want to be in an economy that's deflating, and the fundamental factors and the economy isn't really growing as much as people were anticipating. Anyway, that is it for me for today. If you guys want to watch more of my videos, be sure to go ahead and subscribe to my videos, as I will have more for you in the weeks and months ahead. If you guys are interested in this charting software I use, check out the link right below this video. And that's all. Take care, folks, and I'll go ahead and see you guys next time.